Good morning, traders. This is E for eminingwizard.com and marketwizards.com, reminding traders to use risk capital you can afford to lose. It is Friday, the 7th of December, day in infamy. Risk capital you can afford to lose, name of the game. If you don't have it, get an education. Even if you don't have it but want to grow into the business, get an education, and then when you have your capital, you're ready to rock and roll. All right, we're looking at 5-minute chart. We want to scale it back a bit. Last night we talked, somebody on Twitter had asked me about potentially what ideas I had. I could have given more upside targets. I used the 18 as resistance. And obviously, I also posted that Zeke's range of 02 to 96 needed to be respective, and that would be the best place to short. Now, again, that was for yesterday. So it doesn't necessarily hold true for the next day, but that's the place you got to start, obviously, with where we ended. And then I wanted to see a couple of things happen, and one of them obviously was if we could get back and start to pull back a bit. This late day run, this nonsense run after 3 o'clock, we were down here at 45 at the time, and then it takes off. And at the time, you'll remember I said, be very careful, because it looks to me like they wanted to gun this and then bring it up higher. And I had said at the time, you know, they're going to try to get it to 85, and then who knows. And this is where the logical targets get beat, at that 85 zone, 82 to 85. Traders get trapped. And then the squeeze goes into the close. Now, I'd posted in the room where I thought that they were just going to do this after hours and probably stall in here at that 88 area and then kind of mess around back 88s, 82s, whatever. So it did work to come back and retrace, but that's all. And so that was what I already had in mind, was this 68 area, yesterday's middle. This area should be pretty important to hold. And this was that breakout. So they keep the breakout intact by keeping us above that. So, you know, you want to be aware of this zone right here. I'm going to pull this line up here. This is the middle, right, from yesterday. So they've held the middle, and so we're now in this upper half of yesterday's range. So I'm not even thinking about coming back and revisiting yesterday's low right now. This was one of those trades you just feel it, you know. And then this part here is where I thought they were going to bust out and then get up here on top. And once they break this third time through trade, 82s, 85s, you know, this was a false top, as I'd said. I think it's a false top. Had a few tails, but when it held, just came out. This is a supported market right there. This is just one of those in-your-face guys. So you want to respect what they've done. For now, we've got to trade the range. But I'm going to look at the squeeze pivot, obviously back here at 74, 75. We said they had to, that's the fighting area. That's the open for the year. And last year's high is 98 and a quarter. So this is the current battle zone. And I would not be surprised to see us test higher today. And then the question is, does it get rejected and come back and start to, especially by the end of the day, where are we? So the first marker is going to be IB, then lunchtime, and then the end of the day idea. We can see on the weekly chart, this is the undercut low. You had that gap fill. And then basically, once we had a pretty good size angel, and that was it. And this is the chop zone, right? This was remember that chop zone at 70? Couldn't bust out. I said, make sure you pay by 45s, 49.75. Then we come up, rocket up through here. So this overnight has back and filled that box. And right now we've got the gap at 91s. We've still got another gap up on top. And that was what I was referring to when I said, okay, let's use 18 as our resistance, because that is the middle proportion of this swing. So right now, this is our fighting box, very clear. Support, very clear. This is our current resistance box. We get above this, anything goes up in here. And obviously, all important is that 38-year middle. I see some guys calling for targets up in here. Well, that's possible, but you know what? I go step by step. As Anthony Credelli says, how did you get there? Did you suffer a drawdown of 20 points to get 10 more? That's not a trader. Anybody just picks numbers and throws them out there. Anybody can do that. The hard part is understanding when it's time to give up a trade and then try to get back into it to protect some profits or protect against a big downside. Anyways, that's what I'm looking at on this chart. And we're looking at the monthlies here. We can see this undercut low, big tail. These are 120-minute bars, big push. So can we get to this zone up here? Absolutely. Will we? I'll tell you later. What can I say? Nobody knows. All I know is this is the box we're fighting. We've got some tails down here. I'm going to make a suggestion that says, if we come backwards, don't be too aggressive. I'd rather lose and miss some of a trade down here than get caught and get yanked. So take your stops. Currently, I think that the boys have supported from this low. I don't know that we're going to go back and break under this 45. So that's going to be a position or swing pivot right there. Till that breaks, that's a position support. Obviously back here too, but first is going to be there. Talking about this 45. So for now, we're going to call 70 support. We're going to call this area back up here, this 18 to 20, right? That 20 high, which is this high over here. That's the middle from last month. So that's our resistance for now. And this, if we get above the current high, and we're going to look at the next targets, like 02, 05. And then I think the 10 has also got to be respected. And that 10 comes from this swing chart. Okay, because that's the middle in this swing. So that will be the first key resistance, is getting it above the 10 if we go long side. That's not a guarantee. Just looking at what ifs. So the bottom box held yesterday, right? 03s. And that 30 area, we got above that, boom. We got above that 56, 75, 58 area we kept talking about. Make sure you paid 55s based on this chart. And now we're trying to hold that 84 area, 83. And the middle of the day is obviously right about there. So that's pivotal. And then the top of this is 10.5. If we get above 10.5, then obviously this is the next box. Just very logical. We're trying to organize our minds and understand. Got a gap at 91.5. Anybody's played for the gap, either long side or short side, make sure you paid coming into the open, which will start in a minute or so. So I hope this helps to put things in perspective. Look at a few other charts as well. This is the 5-minute RTH, and this tells me that as long as the low holds, that's 70, this blue line right here, that's support. And we've got the 04, 05 area for now as the rain line looking to get tagged today. So it seems to me this has got to be our fighting range for now. And those of you conservative, stay sidelines a couple of minutes and let the market open up. Our base chart, 15 globex, basically saying the same thing. We're going to look at a 30 today. So this is the chart currently in play. And if we get obviously above the current high, then our targets are going to start to be up here towards that 8 to 10 area first. These are angels and demons right here. Your chart should look like this if you set up with it. And my guess is we've got a little bit of, still got some trap traders. So we're going to range trade for now, but my expectation is we'll probably bust the highs before we're done. Don't want to skew your thinking that way. But it would seem the thing to do today would be try to squeeze some trap shorts a bit longer. And still got to get through that 0.2 resistance right now. And I think that we're going to get a couple head fakes before we're done here. Got that 0.2 gap, don't forget. And the problem for the shorts is that we need to hold the blue line. And that's been done overnight. Problem for the long side, you got to get above rain, just above us. It was yesterday's support, right? IB low. Here's your squeeze pivot, 56. And currently overnight, this was that breakout, 3-point breakout here, and that's held. Anybody that is long side, you are very aggressive right now in relation to the range that's been printed overnight. You're buying the highs, hoping to sell higher. And we got a pretty good jolt yesterday. So I'm not imagining it's going to be easy just to come flying out of here and get another trade like that. Sometimes they do, but that's not what I'm thinking at all. I'm thinking this is the first key range, even just slightly above. That's the first range that needs to be negotiated. And the boys will try to squeeze a few. And if not, then they'll come back and try to pick up some passengers. Reminder, first target is at 0.2. If you're playing long side, first target is trying to break out and get that 0.2 gap closed. Conservative traders, sidelines. And anybody who wants to short, just use a 2 to 3 point stop. I think this chart right here is a challenge right now for anybody that's trying to short. Don't expect a big move. And if you want to let the range settle out a bit after 15 minutes or so and then see if there's a trade you like, fine. We've come a long way from yesterday, and I'm not going to try to encourage you to be too aggressive today either way. This is how the market loves to advance, traps traders and then tries to squeeze. And this rain line is not pure, meaning it doesn't have to stop right at that line, but it does tell you that we're coming into some resistance normally. And truthfully, this, I told you the other day, was a big surprise, because normally it will not plunge like this first time back to it like that. That was a very big surprise. Once it started, you had to keep reading the tape, obviously, but that's not normal. So can they do the opposite over here? Probably, but that's still not the norm. Testing resistance right now. And I believe support so far has been found overnight. Predictive model. Support found at the deepest level. It's the way it should be done. Next level went through. At 75 area has held for now. So that's our support that we are considering is our major support for now. And we're obviously fighting this box and trying to get above into the very next box, which is this one. This was yesterday's high at the 14 area. So this box right here is the new fighting box. Gap is at 02. Gap closed. And we said the first target would be around 06. 575 to 06. I'm considering anything above the 02 to 06 as good fortune in this first swing. Squeeze type trade. Now, in your mind, reconciled, by the end of the day, we're going to have several things to consider. And the first is anybody who's had a great trade longside today and yesterday will want to capture some profits. $575 to 06 was that first target that we had calculated above the 02s. Right there. And then we had said the 10s, if you'll remember. This box. So you guys that want the Santa Claus rally, move your stops up. Anybody who is buying high, selling higher, just move your stops up at 06 to 10.5. T2 today is 27.13. So we're going to use that 12 and a half to 10 and say must be paid for now. That means you either move stops up or you take something off the table if you're long. And because I had that problem earlier today with my computer, I'm not doing anything. Not normal to have, had the problem that I had trying to get the charts working. And so I'm going to take that as an omen. Be conservative. Okay, so this is the chart that we saw earlier today saying make sure you're paid by this. We think this is the next box. And our new middle, around 90. So they basically are trying to take that 91 close and make that the symmetry middle. Anybody that takes a shot at a short side trade, the reminder that the thrust was up yesterday, and the thrust so far is from the low side to the high side. It's a directional move. Chart that we had looked at earlier. I said, let's take a look at the 30-minute chart. A little bit of ahead of ourselves right now. We can see ourselves running into the rain line here. So usually it's a pretty good idea first time back to an area like this, make sure you're paid. And again, that was something that really was very strange the other day, how we crashed through the 30 first time back and just kept. So this is our first time back to it from the underside. And you want to respect it, really. We'll take a look at a 60 also. So that's in the 12 area. So keep an eye on that. This would be our fighting range. And a good first poke to knock the aggressive shorts out, really. And it's using that 10 to 12 resistance. Reminder, the breakout area just below 00. Get on the scoreboard if you shorted. Don't think about this as a plunge trade. It's probably not, even if it is. Over time, you're better off taking something out of the market. And you're going to have a few trapped shorts. So it's going to take a little bit of time. And we said that we were in this current range. Thank you, Zeke. So from the low, this would be a 1, 2, 3. This is a 4-box move. And we say we're going to use this 18 to 20. Key resistance above that, the market can do whatever it wants to. Obviously, the 38, big idea. I think we're going to get a couple of head fakes today. I think we need some backing and filling. But the squeeze is on from that 85 support. And obviously, below that, the 75 to that 68 breakout we talked about. And anybody playing short side, going to use the law of proportion. If that high holds, and we don't know that it will, but if it does, you're trying to give back 2 boxes if you can. And then the third, and after that, good fortune in a 456. And my guess is hit and run, you'll probably do just as well. Keep an eye on NQ. And again, this does not have to stall exactly at the line. Last couple of years, we found it'll get above it and then come back. The key is actually getting below the green line, getting below the red line, and then getting below the blue. And usually you will not fall through all of those at one time. Anybody who took a convenient trade, coming back in to the second line, need to get paid. This is a retest of the breakout in this zone. If we cannot get below this, then traders are still trapped. And if you can get yourself back a little bit further, good luck. And that's 95. You get to 98, put something in your pocket. You already got a dime off the top in a swing. This chart was very helpful. That's why you look at a number of charts. Gives you an edge. And this so far is whack-a-mole, right? Higher highs, higher lows. 88, aggressive support.